Patron, take them away.
Morning, boys and girls. Hope you're well. I'm going to talk about my small FTSE account. I'm going to do more of this. In fact, it might be one of the only accounts that I trade for a little while for you. Why? I put a vote out and that's what you wanted. So let's flick this over because it's just gone into market now. Now, one of the beauties of an account like this is you don't need huge targets in order to survive for the day. In fact, I need next to nothing. Let me pull up my journal and I'll show you just while you can see. It's actually playing on a bounce at the moment. So the Vanguard FTSE, which is this one. And you might sort of think, oh, hold on a second here. It's dealing with pennies. And you're right, I am. As you can see, I only need to do 92p per day to get my target, and we're up £8.50 already, 4.25, and we're nearly there. So the premise of the trade is very easy. Let me kind of take you over onto this. This is something that I put in the Discord, and the guys they're all fully on board with doing account builders like this. I've actually just finished doing my Black Bull one this morning. I'll do updates with that as well if you wish. Drop it in the comments. Let me know if you want to see the Black Bull getting built, because I prefer to build my own accounts. And this exercise that we're doing is kind of here in the Discord. There is small success, and the guys have got right behind it, and the understanding that it's training wheels and it's building up an account. Now, predominantly this should be buying. Okay, so you're looking for the pull down to buy up. So I know it's selling, okay, and I can see that, and I've got minimum targets. Now, if that's the case, why don't I just capitalize on the bounce? Because as you saw with the journal, which is here, I'll pop that up, I only have to do 92p. The problem with sort of this web trader that I'm looking at, it has a minimum size of 50p. So I'm over leveraged all the time. But in my defense, in my favor, because I have to go to market at 50p, and it's across most assets, you've got no other choice. It means it doesn't have to move that far to hit the day target. In fact, it's only 2 pips. Now, a reaction on a level is quite normal, happens all the time. And as we can see, it's pushed up, stopped dead on said level. It's hovering about and thinking. Now, if I'm going to buy this, I'd have to wait a little while, get it down into this region, and then buy it back up for the continuation. Why is that? Well, because markets don't go up in a straight line. You know, so it'll go up, and it's got to give some form of pressure release, because you can see it goes up, comes down, has a bit think, and then goes up again. Well, I'm waiting for it to come down, for it to go up. So I'm going to capitalize on that just to get a couple of quid. So if I click that, you can see it doesn't have to go far. So if I'm just sort of putting in sort of 10, there's like 5 times my daily target. 5 times, which is phenomenal. Drop it into 5 minutes so you can see what's going on. And again, you can kind of see the makeup of the trade coming in. Big surge that hasn't had any kind of retracement, so it has a chance to come back looking for this. And then it's gone up, gone up, gone up. But look, it's all small green candles, but big chunky red candles. So there's probably going to be a sell before there is going to be a push to the upper side. It's that sell down that I'm looking for. Is it, I was going to say, is it safe? No, it's not, because the sheet actually told me it's risky to see. But I'm only trading the FTSE. I've got to good understanding of how it operates. And if it's wrong, well, if I'm wrong, I've only really got to bear it up to here. And all right, it's going to be a bit painful, but it's not the end of the world. But I've got all of this in order to get my short. And I only want to get into the market, grab the money that I need. So anything over £1 is brilliant. And then I'm done with this for the day. All right. Now let me explain that while it's sort of cracking on. Let me just pull up that sheet again. Right. When you're starting to build an account up, the desire to go at it like a machine gun is massive. But is it? Because if you're looking to target 10% a month, which is really good, tell me a bank that will give you 10%. There isn't one. Okay. And you look to trade once a day. So you can do like a set and forget and just let it get on with it and put your target in. All these will mount up. Now, the compound growth might be 10% on the 200 quid, but your position size eventually starts moving up as well. Which once that starts moving up, at the moment I've got a long way to go because its minimum is 20 odd pence. Right? So I can't change the position size till this catches up. And the way that's worked out, for every £100 of money here, I have 10 pence for position, giving me a maximum of 20. So I know I'm over leveraged. But once it catches up and that starts getting to £2, £3, £4 a position, this starts racking up as long as I control this bit. You know, Rome weren't built in a day. This is a long-term thing. So just build it up. £1 a day, £5 a week, 20 quid a month. Well, there's not a bank in the land will pay that, as I said, on 200 quid. But suddenly that 20 quid a month becomes £200 a month. And then the 200 becomes 2,000 and so forth. And yes, it'll take you a year or so to build it up, but it's a year well spent. You have an apprenticeship. When I started my apprenticeship, I used to get £27 a week or whatever it was. I got very little money on my apprenticeship. But once I got qualified and got through it, paid me very well. So that's what I'm going to do. I'm just relying on this bounce to push down into here. Yes, I might weather some heat up to there, but it's not going to be massive. It's a £2.40 and the account can take roughly £10 to £15 worth of maximum risk, because it's maximum risk on a day. So yeah, I'll do 10, 15 quid against it. And if I'm wrong, it's not going to damp the account too much. You know, still fight again the next day. And I won't worry about it. Not a bean. So I'll just play this out and I'll come back to you at the end. Okay guys, it's surged down. It's given me more than the pound I was after. Probably could have had a little bit more as well, for that matter. But I had a fair idea that it was going to bounce off those two levels. It did tittle around on this one. Surge up. I was quite happy for it to surge up. I didn't want it to break the red line, but I was happy for it to surge up to the red line. And then it's come screaming down, and I was reasonably okay for taking the profit out right now. Now, there's nothing left running. There should be no tickets on this. And that has given me £1.50. Okay. I know there's going to be the doom and gloomers out there going, it's £1.50. It's 3 ticks. Bah, 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 bah. Doesn't matter. because what it means is I've achieved a daily target without being greedy, because I'm not greedy. In there, got £1.50, and it was exactly the same as what I was looking at yesterday. Right. Let me just clarify what I'm doing here. I'm looking to achieve 92p per day. Okay. Now, yes, there's the argument that some days I could put 10 quid on as an investment for the entire day, and it would wipe 10 days out. It's just part and parcel of what's going on. Now, the problem we have is, well, it's not a problem. I don't know why I said that. If I take a logical chance, the chances of getting 2 or 3 pips is probably high probability when you're very close to levels as we were. So to do 92p is fine. I'm not worried, because this side, this is not what I would let it run to. This is as far as it dare run to. There is a difference. You would kill it way before. In fact, that red line was about 5-6 quid. So it's less than half of this. Okay. But all I need to do is just do it once a day at roughly the same time. Bump, 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 bump. And you build your account up. And it works really well. Some days you're going to get clipped and you have to be sensible enough to kill it. Let me just show you the bull account. Just while I'm on, because I've done that this morning as well. It actually caught the surge this morning and it did really well. There's the bull account. Now this one was built in the same way. We started this exactly the same, 200 quid, and it's built up, built up, built up, built up. And we are able to put different position sizes in. Oh, sorry, got rid of that one and I shouldn't have done. Bull account, there it is. And it's building up quite nicely. It's now up to 560. Yes, we have added money into it because I earned the right to do so. But again, boom, 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 boom. We started with small figures. We're now up to 50p, but I've got quite a bit of margin to play with. And I'm building. And it's getting better and stronger all the time. See, and there's a case in point. That cost me 7 quid. Got it wrong. But I could have had 25 quid wrong. I had the sense to get out because I could see it was wrong. And that's exactly what I would do with this. Now, the idea of these little account challenges, and I love doing these things, because believe it or not, they are incredibly difficult. If you've got a big account, you can ride the noise out because you've got the margin to do it. And talking of margins and stuff like that, trying to ride something out is exactly why you fail your prop challenges. You have to look at the drawdown. And if you know what the drawdown is, you know what your account size and your position size is. The actual case in point, oh, I've got a 100k account. You haven't. You've got about 4k. So you position to 4k, not 100. Because if you position to 100k, you will find that you would burn through that money really quickly. You know, I've got to be a bit sensible. So that's why I have an invest for the day. So the most I can lose on the day is 10 quid on that account you've just been looking at. Keeps me safe, keeps me in the game, and you just plod along. And the biggest part of this is not the trade, it's the ability to walk away when I'm paid. So it's now 8:30. The job's done. Got £1.50. Whoop-de-doo. But I only wanted 92p. So I'm way over target. Why would I bother going back to market? Don't need to. I'll do it again tomorrow. And I'll build it up. I've already outperformed the bank. There's not a bank in the land that'll give me that for a month. And I've done it in a day. So, there you go. Anyway, I'll do it all again. I'll keep popping these in. Just to keep you motivated. But as always, guys, trade well. Keep your risk managed. But above all, do what you love, and the money will follow. See you all in the next one.